So what do we make of the quarter, Karen, especially given the stock was up into the results?
Yeah, so the stock was up sharply into the results the last 2 weeks. But, I mean, there's some stuff not to like here. And Google's a big position for me. And, so this is not delightful. But I think some puts and takes. I thought the advertising business was fine if you were afraid there. I don't think it was anything to really be afraid of. That CapEx, which you talked about, that is a very big change when we still haven't fully gotten our arms around what is the promise of all of that spend, right? On the flip, so Google Cloud was about $250 million light. On the flip side, YouTube, $250 million above. So I don't know, those two things, even though the same amount of money, they don't seem to have the same weight. The cloud is much more of a focus here. So the last 3 or 4 points down, I don't know what that was. I would say it's really important to listen to the call, hear what they have to say. I want to hear what are they thinking when they talk about that $75 billion spend? Why are they so feeling that they want to spend?
That they want to ramp at this point,
right?
Yeah.
Well, and would we have been happy to hear $50 billion? Because that also would imply that there's been a lot of missteps in terms of CapEx, and they're toning it down a little bit. So I don't know. I mean, I understand why we're watching post-DeepSeek CapEx for everybody, but I think this was all about cloud. I think this is weak. This is bread and butter. Because, I think about ad tech. I think where they are in digital ad, and I think they're dominant, and I think they're going to continue to grow, take market share, and improve margin. So I guess I'm less worried about that than I am the bread and butter, and it gets down to some commoditization and a very, very crowded cloud space. I do like the operating margin at 32%. I think overall margins for this company are getting better. That's good news, and I think everyone just hit it. I mean, this stock moved 40 points, or about 35% from Thanksgiving into the print. It was priced to perfection, even though it wasn't expensive, and Karen will point this out. I mean, what's interesting about Google, and this might be a negative, is that in the run we've had with mega cap tech stocks, this stock is absolutely in line with its 10-year PE. In other words, it's not really a stock that you can say, well, it's gotten kind of expensive in this move and it deserves a higher multiple. It doesn't have a higher multiple. Why is that?
Yeah, gross margins, though, last year, 69%, this year, a little below 64%. So this is something, and it goes back to CapEx. It goes back to, just kind of, how they're operating and how they see their path forward. When you say that step up in CapEx from 59 billion to 75 billion, it almost seems somewhat defensive. And I think Tim's point is a great one. If they had come in from 59 down to 50, might that show a level of confidence about what they've already built? When you think about the hyperscalers in general, they are more interested in asking for forgiveness than permission on this front. And that might be one reason why this kind of story has flipped a little bit lately.